Hi everyone, Rico here. So in today's video, I'm going to share with you guys a really cool concept in forex trading, a really useful tool that you guys can use to make a better trading decision in the future, and hopefully can be more profitable in the future. And yeah, and it's called forex sentiment. Probably you guys have heard about this before, but I want to really show you guys how I use it to make a really better trading decision and a really useful, yeah, for you guys. And yeah, so just check this out. All right, so if you talk about forex sentiment, yeah, this is based on the fact that, well, yeah, you know the stats, right? At least 75% retail traders lose money, and this is actually a really scary stats. We have it here, and based on this fact, right? Well, because we let's just say the majority, right? Because 75% is the majority of people, majority of traders. Then we shouldn't follow them, right? We need to have contrarian view, meaning we need to well, against the crowd basically, right? Because again, majority of traders lose money. This is only logical, right? So of course, then if we know the stats, right, we shouldn't really doing what others doing, right, or majority are doing. We should be like contrarian traders basically, and that's what how I do it. And of course, you're gonna start asking, if only there's a way to know what the crowd is doing right now, right? And well, it's a good news is actually there's a way, right, to know what other traders are doing. That's why that it's called that forex sentiment indicator. Yeah, you guys can just search on the internet. There are so many of them, but this sentiment. So basically, yeah, what is FX sentiment, right? It's actually a tool to determine the positioning of traders. Yeah, so you can see in particular, let's say in euro, US dollars, and what other majority of traders are doing. If they are majority of them are buying or majority of them are selling the pair. So you can see what others are doing. So yeah, what I'm using is fxssi.com right here. This is how it looks like. The only thing is they are not all pairs, right? Only the majority of pairs and one basically gold, and I think that's all. And because we're gonna focus on forex pairs, and these are the only pairs that you can see the what the crowds are doing. See, so let's just, for example, let's just pick the US dollar and Japanese yen, right? And they have from multiple sources, also from different brokers, right? So this is pretty cool because you can see here right now they're with pretty big brokers also. We have Wanda right there, we have Saxo Bank, we have Insta Forex, right? And other sources also. Yeah, we have FX Factory, Dukascopy, my FX book. Yeah, and as you can see that based on this data right here, the majority of traders, the position, you can see the blue, yeah, meaning it's long or buy, right? And the red one is selling or short. Yeah, so as you can see, the majority traders from these big brokers right there says that majority of traders are long or buying this pair, US dollar Japanese yen, and the minority, only like around 30% or so traders are selling. So I cannot really say, I don't even know if the data are really accurate, like it's exactly like, for example, 70% traders out there. No, we cannot really say that, but it just give a clue, that okay, we know the majority of traders are buying this pair, right? And that's actually a really good information that we have there. So now we know what other traders are doing. We know what the crowd, the position, the crowd. Then how do we use it? How are we gonna use this data to make a better trading decision? Well, then again, we remember the stats, right? The 75% retail traders are losing money. So we want to be contrarian trader. We do not want to follow the majority of traders. We want to be against the crowd, right? And that's what we need to do. So basically, yeah, first we need to look for a pair, yeah, FX pair that have at least 60% the majority, right? If it's only 50-50, so meaning it's not that strong, right? But at least 60%. Like for example, this US dollar Japanese yen, as you can see here on average, is 70%. So meaning it's very strong, right? And the sellers are really basically like only, you know, for example, 30%. So basically that's pretty good one. Others, for example, like here, this is pound yen. As you can see, the blue, the buyers and the sellers, is like pretty much the same, like 48 and 51%, something like that. We don't want to see like this. We want to see like a really strong stats like this one, US dollar, Switzerland franc. You can see the average, no, sorry, not the average. The majority of traders are net long, basically, right? They position yourself, they're buying. So we want to be on the other side of it. So we want to sell this pair later on USD Switzerland franc and is on US dollar yen. We want to sell this pair, right? We do not want to follow what they're doing. We want to be a contrarian trader. That's what we're gonna do, right? So that's the first thing. You need to have to see at least 60%. The higher the better. Yeah, if it's 70 or 80%, it's even better, right? So yeah, we just want to be smart and profitable, and that's what we're gonna do. So let's just jump straight to the chart, and we can see how we I'll give you some example how I do it with this the data. So this is US dollar Japanese yen on daily chart, and based on this data again from this week, actually the data actually is not doesn't change that much this week. We know that the majority are buying US dollar Japanese yen, and again, as I said, we want to be on the other side of it, right? We want to sell this pair. So just look at this one. Before we have a really strong support right there, and then we can see there is a basically this is like a long doji, long leg doji, right? Or you can call it a hammer. So just think about it, like what you think other traders will do when they see this, you know, a really strong price rejection right there. It's like a hammer, and then it's like a really strong support. Of course, majority of traders will think, oh, we're gonna buy this because it's a strong support and there's like a price action right there, right? And it's super obvious, right? And yeah, most of traders will just, you know, put place buy orders, right? But guess what? Based on this data, the sentiment that of course, right, people are buying a bit just because of seeing this price action. But guess what? Because of that, the market makers, you know, they know that. So look at that, the price went even lower. So whoever buy US dollar Japanese yen here just because of that reason, they're gonna lose money, right? Because the sentiment still, because they know the majority of retail traders are buying this pair. So they know, right? They know that information, then it's easy for them. They just, you know, move the price lower so they can make money, right? They take out all of the stop losses basically, right? And so I think this one of the examples is pretty cool, how you can see, right, in when we know the stats that okay, the majority are buying, then we need to sell. But of course depends on your trading system, right? You need to follow your system based on your trading approach, based on your entry. Just another example here, let's just use New Zealand US dollar, right? And well, there you guys can see here the majority of traders are selling this pair, and we want to be on the other side of it, right? We want to be a buyer. We want to buy this pair because of based on this data. So just take a look at right here. Yeah, this one is just another good example. You can see here that we have like, you know, some people say it's a triple top, or some people say it's a head and shoulder pattern, right? And yeah, if you look at this, for example, if it's a beginner traders, right? If it's a newbie traders, that when they see this, of course, you know, like, you know what, we have triple tops, we have a head and shoulder pattern right here. What they're gonna do? They're gonna sell it here, right? Of course, right? Because of this obvious triple top bottom. But again, we see the sentiment that, you know, they know the majority of traders are selling this pair, right? Because you can see like the data based on this based from the brokers, right? They are selling, and they know, yeah, of course, right? What they do, they just move the price higher, right? And then whoever sell this pair here because of this pattern, they're not gonna make money. All right. So I think again, being a contrarian trader is actually a really, trust me, gonna save you a lot of money. And I think based on this data, this seriously, I mean, as you know, nothing will work 100%, right? I mean, but I guess this will be like very useful for you to use it. So just check it. Yeah, and then I think looking for an extreme, right, more than 60%, 70 or 80% is even better. So I think from these examples, these two examples that I give it to you, you know what I mean, right? So sometimes something that is obvious like this, for example, this is a long like doji, right, and then it's near the support, you know, it's obvious, people think like, oh, let's go long, buy, something like that. But guess what? Yeah, the price go lower, and whoever buy it here then will lose money, right, because of that. So I think again, guys, the conclusion, check the sentiment will help you. So maybe when you're in doubt, you know, whether you want to buy or sell any particular pair, you know, just make sure you check FX sentiment. If it's in line, it's good, you know, so you just have that more confidence, right, to pull the trigger to enter, buy or sell. So I guess that's all, guys. I really hope this video will be helpful for you to make a better trading decision in the future, to make you profitable in the future. I wish you luck, happy trading. Talk to you guys in the next video. Bye bye.